DA has tried to analyze through this presentation the following event. Core education and technology aborted, several government projects which were in process of implementation. DA made an effort to analyze the event of abortion of several government projects, for the following reasons. A. The segment revenue from governance segment, in standalone financial statements, is declining at a rapid rate. As you can see, the decline on quarter-on-quarter basis is more than 60%, in comparison to previous quarter and nearly 70%, in relation to corresponding quarter of financial year 2012-13. B. The company in facing a tight working capital situation and it has decided to abort several not few, ongoing state government projects. Now folks, if you combine these two situations, the situation appears critical for the company. Now, before we analyze this further, DA would like to highlight few more points, relating to this event as disclosed in notes to accounts. 1. The reason cited for abortion of the projects, is non-achievement of financial closure of these projects. 2. The write-offs taken and as a result, such write-offs comes to approximately Rs 49 crore. 3. The work was in progress, relating to such aborted projects. DA had tried to evaluate the disclosure made in Q1 of financials of the company on following parameters. 1. Financial closure not achieved for what reason? 2. Is the company right in not charging any loss, due to such abortion to profit and loss account of financial year 2012-13? 3. Are the discourses made by company in this regard are adequate? The two possible reasons for non-achievement of financial closure may be: 1. State governments have made some changes in terms of contract, which has led the company to decide not to go ahead with further execution of projects. 2. The liquidity position has forced the company to decide not to go ahead with execution of several government projects. Now, company has nowhere referred about change in terms of contract, although company's management is constantly highlighting prominently the shortage of working capital. Hence, in DA's view, it is not unreasonable to believe that shortage of working capital is more appropriate reason for discontinuation of government projects. Rs 49 crore was charged by the company as a loss on abortion of several ongoing projects in the financials of Q1 of financial year 2013-14. The big question is that, is the company right in not charging any loss, due to such abortion to profit and loss account of financial year 2012-13? DA tried to look into details of transaction, in order to evaluate that, is the company reasonable in writing off entire loss as part of profit and loss account of Q1 of financial year 2013-14? Folks, before we analyze further, let's have a look to some facts of case and reporting requirements as per Accounting Standard 4, Contingencies and Events Occurring After Balance Sheet Date. As per Accounting Standard 4, contingencies and events occurring after balance sheet date are: A. Events occurring after the balance sheet date are those significant events, both favorable and unfavorable, that occur between the balance sheet date and the date on which the financial statements are approved by the board of directors in the case of a company. And B. Assets and liabilities should be adjusted for events occurring after the balance sheet date that provide additional evidence to assist the estimation of amounts relating to conditions existing at the balance sheet date. Friends, few facts that DA has observed and found relevant in this regard are: 1. For financial year 2012-13, events occurring between April 1, 2013 and 30 May 2013, will qualify as events occurring after balance sheet. 2. Date of signing of balance sheet, May 30, 2013. 3. Date of balance sheet for Quarter 1, June 30, 2013. 4. The amount written off includes bank guarantees and security deposits. 5. The adjustment for Quarter 1 is not an adjustment, due to events occurring after balance sheet date. Folks, based on understanding that we have acquired from previous 2 slides, DA is of the opinion that first, decision of taking write-off is based on events that took place between April 1, 2013 and June 30, 2013. Second, it doesn't seems practical that management has visualized, analyzed and concluded in just 1 month, that several government projects are not achieving financial closure, hence abort them. Third, the more realistic view is that this entire process requires a longer duration, and not unreasonable to expect that management was aware of such situations, on date of balance sheet of 2012-13, that is March 31, 2013. Fourth, management and auditors failed to report this write-off rupees 48.65 crore or part thereof, on March 31, 2013, as adjustment of events occurring after balance sheet date, and saved the bottom line through non-compliance of accounting standard 4, that is contingencies and events occurring after balance sheet date. Had management given complied the requirement of accounting standard 4, the profit before tax for financial year 2012-13 would have been lower by nearly 25%, and cash from operation by nearly 43%. The auditor's role in regard to such apparent non-compliance doesn't seems independent. In part 3 of our working, to evaluate the disclosure of writing off the losses of discontinuation of government projects, we have evaluated adequacy of disclosure that company has made in this regard. In our observation, some important aspects of this transactions, company failed to disclose. In fact, it appears as loosely drafted disclosure, which is inadequately disclosing the nature and financial effects of event. As per DA's view, in order to help the user of financial statement understand the effect of transaction, the following should have been disclosed in addition to current disclosures. 1. What would have been addition on revenue and profits, had those projects not been aborted? 2. The collectability/non-collectability of any receivables billed to state governments relating to such aborted projects. 3. Apart from earnest money deposit and personal bank guarantee, what are other major heads under which write-offs is taken? 4. What is the amount payable relating to these aborted contracts? As part of research of this aspect, we have tried to highlight the gaps in statutory requirements versus actual presentation. Impact of financials due to such gaps. Inadequacy of disclosures. Now it is up to user of this research, as to what conclusions they want to draw out of this.